Shekhar, hi. Good to have you with us. How have you been?
Very, very happy evening. Absolutely fine, Ashu. And what a day here. Happy Janmashtami.
Happy Janmashtami to you. This is an exciting conversation, right? I think today, with what you're seeing, whenever I'm doing an angel, investor session, right? It's particularly exciting, right? Because this is truly that time where the requirement of capital has just become so much more relevant, right? While of course, we have larger rounds that are happening. A lot of international investors coming in and participating in some of our companies, right? And we're looking like an exciting market, right? But there's always scope for more, right? And I
Very
think
true.
grassroots innovation has to sort of be uh, supported, right? And thus it becomes important that we have more and more angel networks, right? It becomes important that we have a
Exactly.
thriving ecosystem, right? So this becomes an interesting conversation in that sense. You've been somebody who's been at it, right? But Shekhar, before we dive into the conversation for it, right? I'd love you to take us through your journey, right? You've been an executive, you've been a professional for a very long time, right? And now you're bringing in, while of course you're investing in startups, you're also bringing a lot of expertise to these guys in terms of trying to help them prioritize their key goals, go to market, for example, right? Internal, policies and matrices, so on and so forth, right? So, I mean, your involvement is much sharper, right? So, take me through, all of that, and then we, dive into the session for the day today.
Thank you very much, Ashu, for having me here. And as you said, I think it's the learnings, that is what we are sharing. So let me begin, when I started my professional journey.
Sure.
So it goes almost 2.5 decades ago.
Right.
So that's how long it is.
Right.
So my basic qualification is in finance and accounting.
Mhm.
I'm a chartered accountant with multiple other professional qualifications,
Right.
both in finance and management areas.
Wonderful.
So once I did that, I started my career with ExxonMobil, oil and
Mhm.
gas. From there, I moved to KPMG.
Right.
And the reason to go to KPMG was ExxonMobil being a US company.
Mhm.
We were into a lot of US GAAP, and that fascinated me, the way we were reporting, the disclosures. So went to KPMG, did a couple of US GAAP, and then realized that I'm more of an industry guy. So came back to industry and joined a UK-based multinational. It's
Mhm.
called Lornamede Group, and this group had 40 brands in its portfolio, such as Yardley of London, which was globally well known, Finesse, which was extremely well known in North America and Latin America,
Right.
and many other brands which were kind of popular in their respective geographies.
Mhm.
But this is the beauty that happened to me, Ashu. I had a phenomenal experience there because my exposure was mainly in the M&A, mergers
Right.
and acquisitions.
Right.
So I was dealing with a lot of investment bankers, venture capital firms, private equity guys, hedge funds, and even various law firms.
Right.
And trust me, only when you deal with the law firms, you truly understand when to say no, how to structure, how not to structure.
Right.
So I did 11 acquisitions there and 4 divestments. And the last transaction I did was selling Lonamate Group to Li and Fung. Li
Right.
and Fung is a $1 billion Hong Kong-based group, and that happened in December 2012. Now, as early as 2011, somewhere this entrepreneurial bug bit me,
Right.
and I was chancing opportunities to get into entrepreneurship. And I was super glad, that the sale happened in December 2012. Perfect timing. There was a 6 months transition, which I had
Right.
to go with Li and Fung. I did that, and then started Anova effectively in June 2013.
Right.
I'll tell you the reason why. I was always fascinated with accounting and finance as a function, but more importantly, the analysis and the interpretation of data.
Right.
I mean, always, I read this statement somewhere and it was just etched into my system. Data never lies. And if you torture data long enough, it'll confess to anything. So, that was just etched in my system. And as a
Right.
qualified CA, when you are more into number analysis, you're more into slicing and dicing of data.
Right.
So data analysis and providing meaningful information is part and parcel of, an advisory firm. So that was the greatest motivation.
Right.
So I started Anova, and Anova's focus is mainly in M&A because of my past experience. And
Right.
we are also into fundraise. That's where I started working with a lot of startups. So we are sector agnostic, and we have been working across various segments. And happy to share good news. Last Friday, we signed an M&A deal, which happened in the service department and F&B segment. So we're going to close the transaction, by 1st September. That's why I was telling Vivek, that I was under a little stress, to ensure that I complete that, but good enough that, that got over.
Fantastic. Shekhar, thank you so much, right? I mean, it's for taking us through your journey, right? I mean, it's not, you don't come across professionals, who've had such a diverse experience, right? Who've been across, maturity cycles, right, of the market. And I think here you are, right? And I think those are cycles that will help us in a big way, right? In terms of understanding our market, right, as we go along. And I'm sure this is just so much more ammo for startups which are kind of building for the new age market, right? And for a very, very complex market. I think that understanding essentially helps us define that market better, track that market better, right? But Shekhar, before we dive into your thesis of say investing and so on and so forth, right? I would love you to take me through some of the portfolio companies that you have. You have some great portfolio companies. You've directly invested in certain companies, and you also an LP in some of the funds, right? So tell me a little more about that. And of course, from there we talk more about your thesis and the way you look at companies, so on and so forth. Please go ahead.
Thank you, Ashu, first of all, for your kind words. So let me, discuss when I became an angel. So
Sure.
it is 3 years back, 36 odd months back, when I became an angel investor.
Right.
And as I was working with a lot of startups on the fundraise, I
Mhm.
realized, that nothing like, putting the skin in the game and
Sure.
showing them, that you truly respect entrepreneurship, you worship entrepreneurship. And that's what was the greatest motivation to become an angel investor.
Right.
As I started investing, I realized that it is also good to be part of some of the angel networks.
Mhm.
And after making a couple of investments, I became part of One Crowd.
Right.
And as I was part of One Crowd, I was looking into various startups across various disciplines, and I think that was helping me a lot to understand how the new age entrepreneurs are thinking, how well they're able to come up with a solution to a problem which we otherwise believe is kind of difficult to crack. And that's why I truly started admiring the disruption that some of them were bringing on the table.
Mhm.
So slowly I became part of Inflection Point Ventures, Venture Catalyst, Chennai Angels. I'm from Chennai,
Right.
so it becomes easier for me to be part of them.
Right.
And became part of 4 angel funds. 3 of them are very active where I'm investing. And then recently, as you rightly said, Pi Ventures. This is
Right.
the second fund of Pi Ventures. So as of now, I have investments across edtech, health tech, fintech, even invoice discounting,
Right.
F&B, which is my favorite area because I come from a consumer background, FMCG, and of
Right.
course consumer tech, retail tech, HR tech, clean tech, even electric vehicles,
Right.
and of course gaming.
Right.
And I've not left even space tech and even footwear.
I mean, that was my next question. I'm tempted to ask you, which is the remaining one, right?
So at the moment, I'm looking at augmented reality. So
Right.
probably, that's one area where I would want to invest. Want to actually get experience in terms of what blockchain startups are. So those are the 2 ones that I'm looking at.
Right.
But in terms of my thesis, Ashu, the thesis is very simple. I think the very reason why I invest is to be true to the word angel.
Mhm.
Because who is an angel investor? I mean,
Right.
clearly, we are there to support businesses and ensure that we are able to kickstart them.
Right.
That's what I firmly believe. And I must also admit that angel investment is kind of addictive. So once you get into it, it's addictive, but in a good way.
Right.
We all understand there is risk, but again, being a finance guy, you also realize that where there's a risk, there's a return.
Right.
Higher the risk, better the reward too. So I think
Right.
the reward return is the bigger motivation. And I always say that angel investing is not for the faint-hearted. So if somebody's faint-hearted, never to get into this arena. So the motivation is basically that one can get significant return. One can be part of molding and mentoring certain startups. And I think one of the reasons that we have always learned is that one win can take away all the sins. So you never know that one glorious win can help you in recovering all the money. So I think that was the significant motivation to say that let's get there. So I started with my play money.
Right.
I was looking for investment apart from the usual investment. Was speaking to my wealth manager, and then realized that there is startup as an asset class, risky asset class, but a good asset
Right.
class. So started
Right.
getting there. I know I was paying a very expensive tuition fee because I was trying to educate myself, putting the money. But trust me, looking at the passion, looking at the perseverance of the entrepreneurs. Oh, trust me, it was amazing. So
Right.
one of the mantra I told myself is that angel investment is a marathon.
Mhm.
Don't look, for shorter term. It takes quite a while, for one to truly, build a portfolio.
Sure.
Rather, building anything takes time. Building anything worthy itself, takes time. So give yourself, the time frame. So I have told myself 5 to 8 years,
Right.
as a time frame. Patience is something, that is a virtue whenever it comes to angel investment. And I'm also being cautious by saying that every time I invest, I will take up this, sort of avatar into myself, saying that this is the only one I'm going to ever do. So that's a discipline of which I'm putting on myself so that I'm able to dwell much more deeper into that particular startup,
Right.
get to understand it better. Because I don't want to get carried away by the momentum play, Ashu. Because everybody says there's a wave. I don't want to get carried away by the wave, because then this word FOMO becomes very common.
Yeah,
Fear of
that's
missing.
absolutely, that's become so much more ubiquitous, right? I mean, I think every conversation that you're in, right? I mean, I think everybody is essentially referring to a FOMO, right? And you're absolutely right. I think there is a huge momentum which is largely getting built because of this, right? Uh, I think that fear is very real, right? People don't want to miss that out, right? And I think COVID has kind of made that visibility possible, right? Where people can genuinely now assess an opportunity in a more clear way, right? Which wasn't really the
Very
case in
true.
a pre-COVID environment. But Shekhar, I'm gonna talk to you a little more about what's COVID done, right? And I think as an investor, I would love to understand. You gave me your thesis, right? But I think and also you gave a very important point, right? Which is very important for I think every angel investor, and I'm sure a lot of them already understand that. But the newer ones who are looking to now contribute within the startup ecosystem, right, by participating in smaller checks or whatever, right? Essentially they need to understand the patience part of it, right? So we're going to just talk about that in just a bit, right? But before that, Shekhar, like I said, right at the outset of the conversation, you've been a professional, right, who's really done things, who's gotten down deep, right, who's gotten the hands dirty, right, and you've closed deals, you've been at it, right? uh, when you look to work with these companies, when you invest in these companies, right? And I know that typically, one is always tempted to come in and participate, right? And has to contain himself, herself as well, right? But those that is advice which is very important, right? So tell me a little more about that, right? So apart from the capital, right, what is the kind of participation that you typically bring to the table, right? So tell me a little more about the engagement that you have with your portfolio companies, right? At what level do you engage? How consistently do you engage? How frequently do you engage, right? Are you a phone call away? Are you somebody who's more a fortnightly reporting person, right? I mean, I want to understand a little more about your modus operandi of dealing with your portfolio startup.
So whenever I invest directly, Ashu, I know I'm very clear with the investee, saying
Right.
that I'm not investing because I know it all.
Mm-hmm.
But probably, I tell them that I could be a good fit for them because of the network that I can bring on the table.
Right.
Okay, network could be in the terms of customers, could be in terms of even bringing in further investment,
Right.
could be even in terms of connecting them to whomsoever they want to connect.
Right.
And that is the sort of message that I give them. So as you rightly said, no, I tell them that I'm always available for you whenever you want. Okay, just message me, and once it is convenient, we'll get on a call, or we'll get to meet each other and then
Right.
take it forward. So I tell them that my strength lies in terms of financial and commercial understanding of a business.
Mm-hmm.
So wherever it is strategic, I think I'm the right guy. And the other areas, I would definitely want to connect them to other mentors or other
Right.
advisors who will be there. So this is a sort of philosophy which I have taken, and that's kind of fairly working well for me, Ashu,
Right.
because I see that there is a much more cohesive sort of relationship that we are building. I
Right.
think more than cohesiveness, I think the trust has built over a period of time. That
Right.
gives me the comfort, because these guys also share the bad news quickly, which I think is very important.
Absolutely.
So I think if there's a deeper message for anybody who wants to become angel investor, I think developing trust at a very early stage is very important. And I think angel investor is not investing because they know it all.
Mm-hmm.
Angel investor is coming in because they truly want to help the entrepreneur to succeed. For example, I always tell myself that I'm there to mentor them to success, and I
Right.
just need to look for areas where I'm good at.
Interesting.
Because otherwise, if you want to push them to say that, guys, you need to exploit, explore, get the hyper growth, I mean, that's a statement that anybody can make.
Right.
But I think to sort of connect with them and see if we could leverage the network, leverage our understanding, leverage the experience that we carry.
Right.
Then I think these guys are capable of maybe becoming disruptive, or even maybe becoming a sizable threat to the competition. To the competition. Yeah.
Interesting. Shekhar, I'm going to come to the portfolio, right, in just a bit. But before that, I want to actually talk a little about COVID, right? And this is something which is a constant across all of my conversations, because I want to genuinely understand, how is each person, right, be it a founder, be it an investor, right, be it a venture capital, partner, right? How are they cutting the situation, right? Of course, there are certain trends that have become very clear, but then there are certain trends which have also complicated the market, right? One of my, of course, one of a subset of my thesis, right, is that we are entering a very dynamic phase, right? We are entering a phase where there's going to be little difference between, say, a certain market A and a certain market B, right? So Chennai is exactly going to behave like, say, for example, Delhi, and Delhi is going to exactly behave like, say, how, say, Singapore is doing, or KL is doing, right, or other such more mature markets have been behaving, right. So that arbitrage is kind of coming down, right. The product life cycles that startups enjoyed and business enjoyed, right, which were typically longer, right, we'd say 3, 4, 5 years, 6 years, right. That the product will peak and then it's going to have a reasonable mass and so forth, right. Here, all of that is going to shift into a much shorter cycle, right. We're essentially going to see, just a 12-month or 15-month to an 18-month cycle, right. A lot of fads are going to fly, right, which might not, on the face of it, right, and especially in an environment where there's heavy liquidity, it might seem like a FOMO, right, where you're going to miss it out, but it might just be a fad, right, which will fly and then eventually fizzle out, right. So, like I said, it's becoming a very, very complicated environment, right, to kind of operate it. What do you make out of it, right? Especially when you are, as an angel investor, when you're entering at a very early stage, right? The requirement of capital again is becoming very much, far more dynamic than it was, right? And we've seen that, right? I mean, the fact that so much money has gotten poured in, right, is because larger investors also understanding that to cut a market which is as complex in India is, which is going to take a little time to stabilize, you're going to need a lot more capital, right? Does that opens you up to a very different kind of a risk, right? Is what I want to understand. And second, how do you make out of this situation, right, as an angel investor? And like I said, right, I mean, there are certain trends that are very clear, but then there are certain trends which are very hazy, right? What's your sense of this?
It's a beautiful question, Ashu, and let me give some statistics on this because sometimes even I get baffled, looking
Right.
at them. If you look at the angel investment sort of, startups who have been successful securing the angel investment,
Right.
if you go by the data of, the Indian Venture Capital Association, you'll be surprised to note that in 2018, 256 startups, they got funded, by
Right.
angels.
Right.
2019, it went up to 275.
Right.
And then the COVID year came, which is 2020.
Right.
The number went up to 341.
Right.
So whether it's COVID or not, what we have realized is that I think startups and angel investors and the early stage venture capital firms, they're constantly looking at opportunities to see, if some of them are, in the right side of the traction,
right,
they're going to be funded. Just to give an example, 2021, which is again a continuity of the COVID year, we are
right,
just in August, more than 270 startups have already secured funding, by angels.
Right.
Why? Because there are 30 active angel platforms.
Mm-hmm.
In fact, more than 30, but I'm saying 30 because that's the one I follow.
Right. Right.
And there are more than 6,000 angel investors, and they are
Right.
increasing. So what I'm trying to suggest here is that I think there is always a trend which we all follow, and the trend is always there like a season. Mm-hmm. But when it comes to angel investment as well as early stage investing, even by venture capital firms, you have a lot of micro VCs too. Mm-hmm. This game is on. And this game is on across, various segments. Of course, there are a few segments, which will always be, given the significant attention. For example, fintech or health tech, ed tech, gaming. Okay, and one segment which I'm closely watching is the D2C because I personally love the segment.
Right.
So you will see that anything on the technology side, anything which is again on the OTT side. I mean, things are always happening, and places like Coimbatore, Trivandrum, tier 2, tier 3 cities are becoming much more prevalent in terms of the number of startups that are, mushrooming. There's a stat which says that every year, nearly 4,500 to 5,000 startups, they come up.
Right.
Just imagine the set of numbers. To my knowledge, there are more than 60,000 startups, and that number is only growing. Right. Look at this year. This year we had 26 unicorns just in 2021.
Right.
If you take the total number, that's 63. So I think all these are telling that the investment world, is very, very different. And just to add to the numbers again, because data never lies, just by 26th August, if you look at the venture capital funding, that's been close to $20 billion. And if you look at what was last year, 2020, that was $11 billion. Now you'll argue with me saying that, but 2020 the COVID tha. So let's look at 2019. 2019 kitna tha? It was $13 billion.
Right.
So 13 billion 2019, 11 billion 2020. Look at now, close to 20 billion.
Right.
So that shows, that there are a lot of venture capital firms, angel investors, who are coming in. Just to give an example, 2020 saw 50 different international VCs coming into the country.
Right.
So that's a sort of influx, which is happening in terms of the investment, and so is the increasing FDI in the country. So what I'm trying to say is that despite the fact that we speak of COVID, I think from an investment angle, things are definitely booming. Why is it booming? I think it's a perfect storm of various factors. One is probably the low interest rates in the US,
Right.
which is leading to more investment in emerging markets. The expanding online consumer base in India, oh, it's unbelievably going up.
Right.
And of course, the frenzy on listing, thanks to Zomato, the frenzy on listing is
Right.
happening. I think many more are going to get themselves listed.
Right.
But I think one of the biggest contributor probably is China's crackdown on its own technology companies.
Right.
So I think the digital adoption, which has completely accelerated during the pandemic, has been a big boon for India.
Mm-hmm.
And I think that is why you see a lot of consumer brands, fintech, and even API software firms.
Right.
I think their demand grew significantly. I think easily 3 to 4 times.
Right.
And no wonder the Chinese situation is helping us.
Interesting. Shekhar, what do you, for example, right? I mean, how do you read the Indian consumption patterns around COVID, right? There's been a shift, right? I mean, I kind of alluded to it in the question that I asked you, right? That, arbitrage is kind of reducing, right? I mean, I think numbers essentially are a function of, what's possibly, how things are going to play out, right? I mean, my thesis, like I said, right, is that there is a little more visibility in terms of consumption, right? That, the entire country is kind of converged to few screens, right? Thus, it's become very, very, easy to kind of predict their behavior, right? But like I said, also what is happening is that the kind of influence that they're going to have of content, right, is becoming so much more dynamic, right? I mean, we have a lot of user-generated content which is getting produced, right? And the easiest thing that content can do, right, is influence people, right, into a certain consumption pattern. Now, what do you make out of that, right? And my particular, the question that I want to sort of ask you, right, and I'm going to sort of try and rephrase that question, is that a lot of models have been built on a burn-based philosophy, saying that, this is something you need to prioritize engagement, right? Revenue is something that you can define at a later point, which is not a wrong thesis, right? When you're talking about the size that we are, right? I mean, this is something which could also be right? Because venture capital firms also operate in a certain, there is a certain period that they have to sort of get in and get out, right? That's one. What do you read out of the Indian consumer, right, in a post-COVID environment, right? Do you think this is something which is going to be a very, very difficult phase, right? Well, of course, money is pouring in to solve that challenge, right? I mean, we're a large billion-dollar market, billion people market, right? We're a very large market, right? I mean, everybody wants to have a pie of it. 20 billion, honestly, to crack a market which is that large is a very insignificant amount of money, right?
True.
What do you make out of the consumer trends, right? What's your sense of it? I mean, how do you read that for startups who are getting funded from a solution standpoint, right? Because CACs are also sort of going through the roof, right? Everybody is acquiring the same ecosystem. D2C is something that you mentioned, right? This is something which is becoming a problem, right? A lot of people are talking about this, right? So tell me a little more about that particular bit, right? How do you read into the evolving consumer behavior in a post-COVID, or you say around the same time, right?
Correct.
COVID and post-COVID environment.
So I think the first important learning that we all have had is that post-COVID, or as COVID is continuing to lurk around, I think digitization is transforming India. I think that's a huge message to all of us as entrepreneurs. For example, if you look at the internet users, that's almost 624 million, which is 45% of our population and going up.
Right.
If you look at the active social media users, that's almost 500 million.
Right.
That's like 35% of our population. Just imagine what's happening. Now let's look at what is the cost of data in this country. I mean, the cost of data, Ashu, is just 20 cents.
Right.
We are the lowest. Can you believe that we are just the lowest, in terms of, the cost of data? What about the sort of the consumption in terms of data usage per month? Oh, that's almost 15 GB.
Right.
It's crazy, right? I mean, per user, 15 GB, the cost is so low as 20 cents. So what has happened? What this has done is people have started watching online videos, which is significant. People have, started, listening to music, streaming music online. People have, are very comfortable watching podcast. For example, whatever we are doing now, thanks to Zoom or, Google or whatever it is, why is it all happening? It's all happening because I think the way the internet penetration has been, a lot of entrepreneurs should also take a note of this, that it takes much lesser time to digitally reach out to the customer.
Absolutely.
You're absolutely right. There is a cost of acquiring the customer, but probably that's where you do the right segmentation. You don't go all in and all out. You try to realize, which is your true customer segment, and then reach out to them. So I think now let's come to the habits itself. I think the online shopping habit has significantly gone, thanks to the COVID. the increasing spend, in terms of online, whether it is staples or apparel or mobile or whatever you want. You're looking at, even any consumer goods, white goods. People are happy, to buy it online. So I think what has happened as a current trend is that people are getting much more digital. When I say digital, because data is becoming cheaper, smartphone is becoming cheaper. It's easy, for them, to do a transaction. That's why a lot of fintech companies are emerging across different segments. So the way even the gaming world is shaping, I'm told that the gaming market size is almost like close to $2 billion. And I just thought gaming was Dream 11 because I just see the ad there. But people say, oh, Shekhar, come on here, that's only fantasy sport. We have casual games, we have esports, we actually contest with each other in games. And I'm just, where all this has come only because of COVID. Look at the sort of pivoting that businesses have done by taking advantage of the COVID situation, because they know that they can reach out to the user. Also thanks to the social distancing, which is again made them to quote the reason saying that why they should be using digital much more often, because that's the only way you communicate. So I think all these trends are saying, take Jio, for instance. Jio is very closer to Airtel. In terms of, Jio's market share is 35%, and it's only increasing. So I think, there is a significant shift, that has happened in terms of how, we are looking at business. And if you have to come to D2C in particular, D2C is again an absolute fascinating area, because number one, you can just segment what is within a D2C. It could be a fashion, it could be electronic goods, it could be personal care, beauty products. Okay, it could be food and beverages. Look at the various sort of avenues that it offers. And again, if you look at the online shopping habit, the increase has been 80 million sort of consumers latching on to D2C.
Interesting.
Thanks to the 500 million sort of social media users.
Absolutely. So Shekhar, I'm going to cover D2C specifically, right? I think across our conversation, right, of the 15 minutes that we've spoken, I can very clearly see your affinity, and I think a lot of work that you've done, right. My sense is I think you can very closely relate with what's happening in the D2C ecosystem, right, and the consumer ecosystem. And I'm going to specifically cover that, right, in just a bit. But before we do that, right, I'd love to understand a little more about your portfolio, right? You have a fairly diverse portfolio. Tell me a quick rundown will be helpful, and and I think then I would want to cover certain aspects that will help a lot of other entrepreneurs who are out there, right, to help them understand how you are looking at companies, right, which could possibly be a good way to sort of for them to prepare, right, and while they sort of say approach you and many others, right, when they raise capital. I think we'll cover that, right? But tell me a little more about the portfolio that you have.
Sure. So from account perspective, I've invested now in 30 startups, and 5 funds, 4 angel funds, and 1 Pi Ventures, which is their second fund. And in terms of my portfolio, they are across food and beverages. Food and beverages has been, a very interesting area for me. And I started focusing on that a lot. For example, the investments include Fabbox, it includes Samosa Party, which are doing quite well. Happy Jars, which is again doing quite well. And then slowly, I also got into the retail, because again, that's an area which personally, I love, So that's where, the Ankas, Sumo, which deal with the retail, Drop Shop, which deal with the retail, all that, became part of my portfolio. And then slowly, I started getting into the electric vehicle segment, and Blue Smart, which is doing exceptionally well. That's a portfolio which I'm very proud of, and also got into gaming. So, I have a diverse portfolio, Ashu, and the reason for having the diversity is that if one understands the risk reward, sort of mechanism, unless you diversify your portfolio, it's very difficult, even to know where one is heading. So that's a big learning I had, because I did 3 direct investments, of which 2 are doing well, but 1 was a huge surprise to me in terms of, how it shaped up. Of course, we are trying our best to see that, we'll get our returns, but not in the sizable returns that we anticipated. But I think those are all the learnings that you need to ensure that you're able to work with entrepreneurs in terms of shaping them on the market aspect too. So let me give you a few examples of, the investment which I'm very proud of, So one is Expertrons. This is a investment, which I did via IVCap Angel Fund. And we also raised recently $2.3 million.
Mhm.
And I love, this particular startup because if you look at Expertons, this is a AI-based video bot assisted platform. So what I
Right.
mean by that is, at one end you have the job seekers,
Mhm.
and at the other end, you've got the experts and mentors.
Right.
So this, amazing startup is able to connect them on the career guidance across, various, sort of professional needs. But more
Mhm.
importantly, because the AI bot is, working, it is
Right.
making it intelligent in terms of ensuring, that, there are trigger points to, to answer and, pick up, some of the nuances of what the candidate
Right.
wants. So you've got experts who come from some amazing backgrounds. So
Right.
obviously, their own strength itself, adds to the, the credibility. They come from Mastercard, they come from Google, JP Morgan. So you can imagine the sort of experts, that they come from.
Right.
So this is an absolute, matching platform, more from a counseling angle, and it's doing, significantly well. So I'm very proud of, the way these guys are.
Right.
Blue Smart, which is in the electric vehicle space. Now they are considered the largest electric ride hailing fleet.
Mhm.
That's what they have.
Right.
And obviously, being an electric vehicle, we're speaking about clean and safe environment. And Blue
Absolutely.
Smart, does ensure, that, their drivers, they are into the contactless mechanism. They check the body temperature. There is a face mask, which is given in case the customer, has not come up with a face mask. There is
Right.
sanitization. But let me tell you what is the tailwinds, that is making this business grow. One
Right.
is the low cost of ownership compared,
Mhm.
to the ICE, the internal combustion engine. More important, the falling battery cost,
Right.
which is happening, which I think is a big boom. And more importantly, the increasing vehicle range on a single charge. That is
Interesting.
again a great benefit. And of course, the government's measures, both the state and central government, on the policy itself. I think those
Right.
are, helping a lot. So I think this is again a very proud investment, which I have. The other
Right.
one which I want to talk about is a very recent one, happened from Pi Ventures side.
Mhm.
This is a company called AI Palette. And AI Palette is basically a food tech company.
Right.
Okay. And what they're trying to do is, it's very simple. There are various ingredients, there are various flavors. They analyze them, and give a data which is very meaningful to say how long the demand will last.
That is very interesting. That's exactly what we spoke of, right? Around.
Right, so it's very fascinating, when guys do that. And these guys are having clients like Danone, Kellogg's,
Right.
Cargill, which are not ordinary names. They raised $4.4 million, recently. And I think the way they are going about is very sensible, because
Mhm.
all of us are socially engaged. So
Right.
they want to understand the social engagement patterns, and then probably analyze the data set to ensure that, how you can even come up with a local recipe. So this is unbelievable, sort of, startups that are coming. So I'm just telling you, Ashu, that, I mean, the sort of startups that are emerging, the new age
Right.
entrepreneurs that are emerging, is
Mhm.
unbelievable in the way, these guys are able to come up and create something which is very, very novel. At the
Right.
same time, I believe some of them are going to be disruptive.
So, Shekhar, you'd be surprised, and I completely concur with what you're saying, right? In fact, 200%, right? I think the majority of founders that you see today, right? I think it's just so much more different. It's just so much more sharper, very evolved, right? So the way they understanding consumer priorities is absolutely phenomenal. I think
Very well
that's
said.
something that's something that we're seeing across the board, right? I mean, that's something that you see at fintech, insurance tech, right? Food tech, for example, right? And a classical example of what you gave, right? Which is a huge application of artificial intelligence to understand and predict, right? I think that entire behavioral play, I think, is just so much more fascinating, right? I mean, we do a lot of these sessions with a lot of these founders, and I love the way they cut it, right? Those finer nuances, the way they understand them, and the way they build that into a core product offering is absolutely mind-boggling, right?
Very well said.
But also extreme maturity, right? And something that we're very
Very
proud
true.
of, right, as Indians, coming from our things. Shikhar, I'm going to ask you a little more. I'm going to move into a very cliche territory, right? And that is more to do with, your, for example, when you look at a company, right, from an investment standpoint, right, be it in a personal capacity, be it a fund, because you would make those recommendations to the fund, right, that you are an LP in. Uh, Tell me a little more about it, in the sense that,
Sure.
what is a good pitch deck for you, right? What
Sure.
is that stage where a founder is, right? That becomes, when it becomes relevant for you, right? It becomes exciting for you, right? So tell me a little more about that, bit journey process.
Sure. Uh, Whenever a startup presents to me, or an entrepreneur wants to discuss with me, I think the first thing that I want them to share is what is the problem, they are tackling.
Sure.
So I'm more interested in something what I call as PS fit, the problem solution fit.
Right.
Because I always say that a problem well defined is a problem half solved.
Mhm.
So are these guys able to explain to me truly that how well they have defined the problem and therefore what is their solution?
Mhm.
And I think the first curation to understand whether a business can be faster, cheaper, better, because that's what we call, for a scalable business,
Right.
is to know whether these guys are attacking the right problem.
Mhm.
In fact, we even want to find out what made them think, that there is a problem.
Right.
What are the key insights, that they've derived?
Mhm.
Why the existing solutions are not working?
Right.
Who is feeling the actual pain point? So I always want them to share this, in the form of a story. I tell them, give me some instances.
Right.
And as they're sharing the instances, I also get to know what made them to begin this journey.
Interesting.
And then I also want them to explain to me the why that they think, because the young startups, they lack a history of proof.
Right.
They have plenty of purpose.
Mhm.
So when when they explain the why, you truly understand that they can truly come up with the how.
Right.
So I want them to communicate what is their thinking in terms of what is this big problem, and then I want to look at how passionate they are, how authentic they are, so that I can relate to the story that they are sharing.
Right.
I mean, that story is really target the head and the gut.
Right.
If it is real story, trust me, the relatable part definitely touches both your heart and your gut.
Right.
And I think the way they convey the why tells you that there is a high impact that these guys can create in a short time.
Mhm.
So the story is all about the opportunity. For example, are they explaining to you about the market forces? Are they telling you about the growth milestones? Are they telling you about how they understand the competition? But more importantly, I also want to understand whether these guys have an unfair advantage.
Mhm.
So this is where I want to look at the product market fit.
Interesting.
How well they truly understand whether their product can be disruptive in the market. And when I say unfair advantage, definitely I'm looking from a founder's angle. I'm looking from a market angle, can this grow at a CAGR of 20-30%?
Right.
I'm looking from the product itself, whether this can be a 10x better product.
Sure.
I'm looking in terms of you said about the CAC, in terms of what is their acquisition cost. Can word of mouth play a better role, or is it that they need to spend significant money?
Right.
More importantly, can they also create some sort of a monopoly in the sort of section of customers that they're dealing?
Right.
So these, is something very, very, very important. When it comes to the market, I'm not a fan of the TAM, SAM, SOM, because that's something, which everybody speaks of, the target addressable market, serviceable available market, serviceable obtainable market. But I always say that, okay, if you understand your serviceable obtainable market, just tell me in the next 3 to 5 years, what will be your market share?
Mm-hmm.
Because when people just throw me the SOM, that doesn't tell me anything. I want to truly understand what is the market share that they can garner out of it. And this is where I truly start to understand whether these guys are getting into the metrics. Because I have a huge fear when I deal with the startups. Are they discussing vanity metrics or actionable metrics?
Mm-hmm.
Because some of them are very clever just to tell you the number of app downloads or the Facebook likes or the Twitter followers or even the website visitors. That doesn't mean anything at all. I tell them, boss, these are all vanity metrics. Tell me the actionable ones. For example, how many you're able to convert.
Mm-hmm.
What's your paid users? What's your churn rate? What's your lifetime value of the customer? Do you understand the unit economics, both from a product angle or a service angle, as well as from a customer angle? In case you have users, are you tracking your daily average users, your weekly average users, your monthly average users? What's your average revenue per customer? So I think these questions are something, I don't hesitate in asking, Ashu.
Right.
I know they may not have answers to all of those, but at least I've seen that it triggers a thought process in them. That these are some of the things, that is very relevant for them to at least think in terms of garnering so that they can get a better investment.
Right.
Because angel investment sometimes I believe is, sometimes you feel and then you do. So it's very, very, very intuitive and it's very, emotional also sometimes. So if one is emotional all the time, probably that's not good at all, from an investment angle. So I think you want to ensure that these guys understand, apart from the metrics, also the competition, because only when they understand the competition, probably they'll start measuring. I always say that if you can't measure, you can't manage. If you can't manage, you can't control. If you can't control, you can't direct. If you can't direct, how can you progress?
Interesting. Shekhar, I hear you, right? And I don't, I think what you're saying makes complete sense, right? I think that entire process and journey is very important because it just makes you think better. It just prepares you to be a better founder, right? It just prepares you to anticipate conditions, possibilities, problems that you could possibly face, right? That help you manage money better, right? But in an event like the one we are in, right, which is of extreme liquidity, right? Money is rolling in. Funds are now setting up early stage vehicles, right? They are entering at literally an acceleration level. Today, for example, there was an announcement, right, which where there is a large marquee fund which is talking about creating a structure which is around non-dilutable equity, right? Even if you, for example, are at a paper stage, right, zero traction, what does that do to the entire psyche matrices thesis that you just spoke of, right? What does it do to that, right? Because this just a founder will never prepare himself herself at that level of detailing, right? Because there is still operations to be built, right? There's still to encounter some of these issues, right? What they will possibly land up doing is essentially just build a paper plan, right? Which might not necessarily cover the nuances, which might not give you the kind of visibility that you would possibly, for example, seek, right? It might just be a very, very different environment, right? It might just be a very tangential level of a presentation that they make, right? What do you make out of a situation like this, right? I mean, do you think this is going to change the behavioral trends, seriousness to a certain extent of the founders, right? Around ensuring that there is sensibility which is required to build a business, a sustainable business, because there's money at stake, right? What are your thoughts around that?
This is an amazing question, Ashu. And I think, let me allay to the fact that there are different stages in which funds are raised.
Sure.
So as you rightly said, no, there are certain businesses which may not have the revenue traction. They are pre-revenue,
Right.
but probably, like a freemium model, they
Mhm.
can still demonstrate some of the traction in terms of how many users are coming in,
Mhm.
how many users are active. That can still happen. But I
Right.
think the biggest, aspect which comes here as investors when we assess them is truly the founder market fit.
Mhm.
That becomes, very, very significant. So when I say
Right.
founder market fit, we are looking in terms of, how strong they are in the domain,
Mhm.
what sort of pedigree they carry,
Right.
and more importantly, are they coachable? Are they teachable? Because one of the aspects that we have seen, with certain founders is that if they are not wanting, to take certain messages, that are coming to them, which will do good to them, then that
Mhm.
becomes a deterrent later in terms of what sort of relationship one can have.
Mhm.
So we are always looking in terms of how teachable they are. More
Right.
importantly, as they are talking, we want to understand the clarity of thought, their business acumen, their ability to build the team, and even in terms of understanding how well they are networked,
Right.
because even that is of a great paramount importance to know how
Mhm.
well they can connect with others for certain needs.
Right.
But then again, the team comes into a much more bigger way, because whenever I speak of team, I'm only looking at how cohesive the team is,
Right.
what sort of mutual respect the team has. I always say that we are not a team because we work together. We are a team because we respect each other, we care for each other. So if you are able to see that, then I think you will see functional responsibilities. You will see that there is a sense of belongingness. You will see that that it's not that a single founder comes and talks. You will see people joining for a presentation or for a
Right.
discussion. So those are the sort of things that we look at, and of course the energy levels within the team itself. So yes, the metrics do play a role, but again, as you rightly said, if the business is at a stage where they're not in a position to tell that there is revenue being generated, or probably the metrics are not much more stronger,
Mhm.
you're looking at the founder market fit, because we all bet on the jockey in the horse.
Right.
So
Interesting. Shekhar, you're a man of finance, right? I mean, and something that you kind of alluded to in the early part of the conversation as well. I mean, that's something that you've done for a very large part of your professional career. I mean, you continue to do that, right? When you're evaluating a founder, right? And this is something that I personally look at, right? When I talk to founders, is that how well do they understand their finances, right? At an organizational level, right? How sharply do they understand that, right? How important is that? I mean, essentially, what we tend to come across is a very techie heavy or tech heavy, team, right? I mean, there's a phenomenal understanding when it comes to say the consumer psyche behavior, right? But what I've typically realized is that financing or finances is one side which is not very as sharp, for example, right? In many founders, and I'm saying there are some exceptions which are, and these are founders that are absolutely standout founders who have a brilliant grip on the kind of money which is being spent to acquire a customer. How internal mechanics are being worked out, right? But then there are of course founders which are kind of struggling with that, right? How important in an environment, especially when you're looking at a founder market fit, which essentially means that you're looking at some previous experience, pedigree, something that you highlighted, right? How important, but that's something which is essentially uh, of a background, right, of whatever work profile that they've had, right? This might not necessarily mean that they understand operating in an independent environment as well, right, as required, right? How important is understanding of the financial aspect of that business, right? How important do you think that is, right, when you're looking at a founder? What are some of the key aspects that you look at, right, on him or her understanding that the money is coming in, there is a certain responsibility attached to it, right? How sharply do I need to cut it, right? India is a complex market, right? That also is a reflection of how you prioritize that market, right? That also leads into CAC, something that we have kind of mentioned off, right, in our earlier point. What are your thoughts around that? I mean, how do you evaluate a founder on that particular aspect? Because it's important to be, very sharp. You cannot afford to be naive in a market as complex as India is, right? What are your thoughts about that?
Honestly, at this stage, Ashu, you're not expecting them, to explain to us the P&L or the balance sheet.
Sure.
What you want them to explain to us is, do they truly understand what sort of margins they are making?
Mm-hmm.
Do they understand, what is the average revenue per, the customer or acquisition or the user?
Right.
When can it grow? Okay, let's say the customer lifetime value and the CAC, it's not in the favorable trend. Okay,
Right.
when do they think, it can become favorable?
Mm-hmm.
Do they truly understand, what money they are raising and for what? How long will it last?
Right.
So I think some of the questions that we are asking is pretty basic of
Mm-hmm.
any CEO, who is running an organization. So if you personally ask, this is very personal now. If you personally ask me, if the founder is not able to explain to me
Right.
simple questions like unit economics, okay, understanding the margin, what
Right.
is the monthly recurring revenue, and therefore what do you think could be the annual recurring revenue?
Right.
Okay, what is your break-even point? How much funds you're looking for, and how long will it last?
Right.
Okay, let's say I gave you significant more funding than what you wanted. How fast can you grow?
Mm-hmm.
He can't go back and tell me that, okay, let me check with my accountant or check with my CA and then get back. I want the entrepreneur to have the magic of thinking big.
Right.
I want him to truly understand the market, how large it is, how they are well suited to penetrate and capture that market.
Right.
I want to see the vision. And therefore, I'm not saying I'll be finicky about it, but if I don't get the basic answers, I'll be nervous. For example, whenever I evaluate a startup, I have a philosophy of myself. I call it a scream. Because these guys are screaming for money to me. SCREAM. And I took this acronym because I love the movie Scream. I think there are a lot of sequel also for this. I'll tell you what Scream stands for quickly. S is scalability, because we all believe in that. If it is not scalable, why even invest in that?
Right.
C is the capable team. And for me, the capable team is all about cohesiveness, about the mutual respect. I want to see that. That's why whenever a solopreneur comes or a single founder comes, sometimes I'm nervous. I will admit, unless I see a second line.
Right.
And if there is an ESOP scheme, I truly love it, because that shows that the founder is very much, having the confidence in some of, the select team members.
Mm-hmm.
R is the resilience, because the resilience tells me how well they appreciate the competition, because I hate someone when says, there is no competition. I think there's always indirect competition. There's always substitutes.
Right.
So I think one should always look further. And to my knowledge, there's always a direct competition unless you're a blue ocean strategy. Okay.
Right.
The E is the energy, because I truly want to understand, how enthusiastic they are, because to me, that's the X factor. The way, they come across and explain. Kya josh hai unme? That A is very important for me, because that's called anticipating success. And what I mean by that is, this is where are they well prepared even to tell me their realistic goals, and not just some hockey stick numbers, which as soon as you look at, you feel, kya ho raha hai?
Right.
So are they realistic in terms of what goals they set? Do they have that, right structuring of even the entity to ensure that they're getting the funding, and therefore they need to at least have some understanding of the valuation.
Right.
They can even tell me that, it is a discovered valuation. We don't know at the moment. That's fine. But at least they should say it's a discovered valuation.
Right.
And finally, that M, that stands for metrics.
Right.
So metrics is all about how do you track your business. That's why I said, if you can't measure, how will you manage?
Right. Interesting.
So the answer is the basic understanding of the business in terms of milestones, in terms of performance is very important. I am not speaking about P&L balance sheet.
Shekhar, how I want to continue on this point, right? Unfortunately, there's this paucity of time, right? Towards the last few questions of our conversation, right? In fact, when you're talking about competition, I wanted to sort of step in and there's a certain thought process that I have around competition, right? There is visible competition, then of course there's invisible competition. It's just about
Exactly.
that, for example, that other player to realize, that this is something which could be their play, right? And then
True.
of course, then their layers sort of kicking in to sort of start to compete, right? And I think that's a very difficult environment to kind of predict, right? But I think that we're going to reserve for the next conversation that we have,
Sure.
Shekhar. Shekhar, I'd love to understand. I mean, something, D2C is something that you kind of mentioned of, right? I mean, there's a huge excitement that I could,
It is there.
there's a thing in a ring that I can, which I can sort of, hear, right? As soon as I say D2C, right? You've been in that space, right, where you work with very many consumer brands, right? You handle them, you scale them. There's a lot of acquisition that you've done. Tell me a little more about that as a space, right? I mean, what excites you with D2C? I mean, all of us know that this is an emerging area, right? How do you look at D2C as a space, right? And what is it where we can see in future, right? From a participation standpoint, coming largely in the D2C sector.
Let me first confess.
Sure.
I've been a CFO, I've been a finance director, and it's very difficult for me to understand that in 3 to 4 years, okay, a brand can do 100 crores.
Right.
That's just a struggle for me. But let's take D2C.
Right.
Licious made 100 crores in just 3 years.
Right.
Country Delight in 4 years.
Mm-hmm.
I can give you so many examples. Okay. Sugar did in 4 years. Mama Earth did in 3 years.
Right.
HRX, which is your Hrithik Roshan brand, did in 5 years.
Right.
So what I'm saying is that, I think this is a huge market, D2C.
Uh-huh. Right.
And if I remember right, certain reports are saying that by 2025, this is like $100 billion market.
Mm-hmm.
And as I said, what fascinates me in D2C is that you can bifurcate the segments. You can have beauty and personal care, you can have food and beverages,
right?
You can have fashion, which is growing unbelievably. And
right.
within fashion, you can say ethnic wear, Western wear. You can just bifurcate them. And of course, your electronics and appliances. I mean, look at Boat.
Right.
A homegrown brand, and how well, it is doing. So what fascinates me is my own segment, which is personal care and cosmetics, because that's where my experience is significant.
Mm-hmm.
And within personal care and cosmetics, look at the sort of brands that are there. You can bifurcate them again to say that, some of them are natural, some of them are organic, some of them are Ayurvedic, some of them are vegan. And, brands like Mama Earth or, Wow, which is doing so well, or, Plum, M Caffeine. I mean, all these brands are something, that are very closer, or let's say Sugar,
Right.
So what I'm trying to allude to the fact is that if you look from a funding world too, I think there's a lot of attention that is given to D2C brands.
Right.
Wow Skin Science recently raised $50 million.
Right.
So they were completely bootstrapped, and then Chris Capital came in, took a 35% stake, for a $50 million check. Juicy Chemistry, which is from Coimbatore, it's an organic personal care brand. It got a $6.3 million and came from World Invest. So it's an amazing story for me. Mama Earth, Sequoia has, funded and probably they funded at a 700 million valuation. So soon you will see another unicorn, coming from there. Nykaa, nothing, needs to be spoken of. It's already going for an IPO. Very, it has turned profitable.
Right.
So you can imagine that. I think, Sugar Cosmetics or, Sentiel Beauty Care or, Dot and Key. I think there are these various brands which are doing quite well in terms of their D2C, and some of them are very smart. They're looking at even omni-channel strategy. Mm-hmm. Just to give an example, Nykaa, which we all know is more digital e-commerce platform, has got 70 of its own stores because they know that some of the customers want to have this feel and touch.
Right. Touch and feel, yeah.
So from a D2C, they also realize, that, they need to have, certain other omni-channel strategy for them to grow. Right. And look at the big lads. The big lads are trying to acquire them. Beardo, Marico. So I think what is happening in the D2C space is that, some of these brands are growing significantly. And I think there is every opportunity for a strategic, sort of acquisition to happen there.
Mm-hmm.
But I think even if you look at the brands themselves, they are different from their own perspective. For example, some of
Right.
them are focusing on the customer need. Mamaearth is exactly doing that.
Right.
Some of them, are more, technology driven, like WoW Skin Sciences.
Mm-hmm.
So this is what fascinates me. One is the size. The other is the
Right.
fact that, they're all home, grown brands, which are very, very niche in the way they're doing, but a turnover which is growing. Because
Right.
one is that when you say niche, then the, mind says, oh, the turnover may be lower. No, the turnover is growing. I just gave an example, of just a 50 million check, coming and hitting. So this is
Interesting.
the beauty of, D2C.
Interesting. Shekhar, I mean, I have a lot of points on D2C, right? I mean, I think it's it's a beautiful market. I think the fact of the matter is that, there are brand owners, who are now kind of directly engaging with the customer. But I think there are, D2C is still we are operating in a very, very complex environment. And
Very true.
and I was in very recently, I was in a conversation, right? Where, I was talking to the founder of a house of brands, right? Which is now coming together, right? And uh, I mean, e-commerce is still just about 2-3%, 4% of what
True.
the India market is, right? And I think D2C is essentially a subset of that, right? So we're talking
Correct.
about a much smaller number, right? I think India is still offline, right? I mean, there's a huge experiential playbook that needs to be built, right? But I think many D2C brands, I think we're at a surface level, right? But I think I'm going to reserve that for our next conversation. I think given your expertise, given your so much of diversity in all of what you've done, right? I would love to have a specific session which is focused towards D2C and possibilities that you are evaluating, right? And within your syndicate, right, of investing, in the D2C space, right? Uh, Towards the last question, right, Shekhar, it's on many occasions, founders, are just dealing with so much of information, right? There's just so much of noise as well, right? It becomes difficult for them to, kind of prioritize, right? There are, of course, some good ones, extremely mature. They're very clear in terms of, what they want to do, possibly what they're kind of solving for. Is something that they've personally experienced, right? They've either been part of it, while they were working, or they were on the receiving that side of it, where they could see the gap, right, and then they kind of build for it, right? And then, of course, there are founders, who are not necessarily as, for example, clear, right? And they're not necessarily coming from that zone, right? With that clarity, right, of the possible market size, right? I mean, it's a lot of noise that they have to sort of deal with, right? What will be that advice that you have for them, right? I mean, given that capital has become important to grow a business, right? Especially in an environment when there's just so much influx, cost of acquisition, like we sort of mentioned, right, is going through the roof. It's becoming difficult to acquire a customer. It's becoming difficult, right? Because to build that entire consistency in relationship, right? Because there is some other brand which is going to come and bombard them with more advertisement, more freebies, so on and so forth, right? What what will that advice be, or maybe a two or three, right? That you think is relevant for a founder to look at, right? So that they can prepare themselves well, go out, raise capital, and build a strong business, right? What will that advice be?
Ashu, I'll share this from my own experience of having dealt, with those startups, with whom I'm working.
Mhm.
But I think if I have to, share my perspectives, I'll share three perspectives. So allow me the next, couple of minutes for me to share them.
Sure.
I think I'll begin with fundraising, and that would be my first message. And I want to share by saying that fundraising is an extreme sport.
Right.
You know, for example, I always say it's like this high speed, high risk game.
Right.
So the bigger message to the entrepreneurs is, they should learn to embrace and face rejection,
Right.
because that's one of the best things that can happen to them.
Mhm.
Why am I saying this? Because that rejection is only a feedback.
Right.
So I always say that, when you say fundraising, there are two I's.
Mhm.
Those two I's, should stand for inspiration and innovation.
Right.
They should not stand for imitation and irritation. What I mean by that is, you can't just come up with a Me Too idea and then get, the feeling that why, fundraise is not happening, because you're just imitating.
Right.
I think you should focus in terms of showing that differentiated value proposition in a much more bigger way, because that's where the investment happens. Second
Right.
is, irritation. Just because the fundraise is not happening or not happening in time, I
Mhm.
don't think, entrepreneurs should get bogged down.
Right.
Because not raising is not failing.
Mhm.
Raising is not a badge of honor like many people think.
Right.
In fact, I say that raising is not succeeding. Why do I
Right.
make this statement? As an angel investor, I make this because I've seen Tiny All, Pepper Tap, Stayzilla, which is Chennai based,
Right.
Just by live, Showtang, Doodhwala.
Mhm.
I mean, all this raised significant money.
Right.
but they're gone. And raising fund is not a one-time decision.
Mhm.
That's why, it's called fundraising, which means it's always in the present continuous. It's a series of funding,
You have to be constantly at it.
So after that initial fundraise, one should start planning for the next fundraise at a reasonable interval. It can't be the
Right.
11th hour.
Right.
So raising money is not the key. What you
Mhm.
become is the key, is the biggest message I want to tell the entrepreneur, because the greatest value in life is not what you get. The greatest value in life is what you become. Entrepreneurship is becoming someone. You're making people to look up to you. And because I'm saying this, I also want to give a caution on the valuation. Valuation is always difficult. I mean, you can ask a guy like me, a CA, still, I will only, make a guesstimate. It's very difficult. And therefore, I'm going to borrow what Mark Cuban famously said.
Right.
He said, owning 60% of watermelon is better than 100% of a grape. So don't worry about the valuation at the moment. So my
Right.
first message is fundraising and valuation. The second message I want to give is execution. Because execution is important. Action is
Mhm.
important. I always say that it is not in the power of ideas that success lies. It is always in the power of execution.
Right.
I always tell them ideas never fail. So don't come and give me this, saying that your idea is great. Idea never fails. The business model that you have to an idea, that can fail. So constantly challenge your business model.
Right.
In fact, we discuss about business model canvas because that's the easiest way to at least quickly understand where you are. So I tell them that more than the idea, how the idea is presented makes all the difference, and therefore have mentors, have advisors, run through them. And because I say that, Ashu, I always tell them that own your failures. This is one thing that I don't see in entrepreneurs. I tell them, take responsibility, don't blame anybody. Recognize quickly, when something isn't working,
Right.
that you should detach yourself, from the idea and not be too emotional about it. You should embrace the feedback and the criticism that is coming, and more importantly, learn, course correct, pivot, rinse, repeat, because that's what happens in any mentorship session. And finally, I tell them that entrepreneurs have to be leaders. People are looking up to them. It's not your domain experience and your domain expertise which always, does the magic.
Right.
It's all about your attitude, how well you are as a person in terms of leading and inspiring the team. Because I always tell them leadership is about being a conscious choice to be your best.
Right.
It's consistently being the best person you can be. And that's what, the others are looking up to you. Things may not go well, but you have to go right. So how, as a founder, you're above the crowd, you're investable. That's a very, very important message. And sometimes I even share this small anecdote. I tell them there was a disciple who was asking the monk, why all these precious things are in scarcity? They're in shortage, they are in short supply. For example, drinking water, or let's say even the air that we breathe.
Right.
The monk smiled and, replied in a very calm manner. He said, it's actually the other way.
Mm-hmm.
Because they are in scarcity, they are precious.
Interesting.
So I tell the founders, can you be that scarce? Can you be in that scarcity? Can you be one notch up? Can you be above the crowd? Because only then you give FOMO to the investor.
Right.
And I think giving FOMO to the investor is very important if you want to get the investment. I'm not saying that investment will happen, but trust me, higher chances of getting invested is possible.
Right. Interesting. Shekhar, how I wish this conversation could go on, right? I mean, I'll end up saying this by the end of, I think, each conversation that I'm having, right? And my team hates me for that. But I think there's just so much more intelligence, right? I think a lot of people in the Indian ecosystem have, right? The kind of experience that they have, the kind of exposure that they have, the way they are able to, look through the market complexities, right? The execution challenges, right? I can only wish to have those conversations for a much longer time, right? I think, but I would want to carry this conversation across, other sessions, right?
Thank you, Ashu.
It was a pleasure to have you, Shekhar. Thank you so much for taking the time out. I think some of the factors that you highlighted, right, are just so much more relevant, right? I think they're just so much more important, logical, and it's very critical, and they're not difficult, right? I think it's so important for founders.
Beautifully said. They're not that difficult. You're right.
They're not difficult, right? I think this founder just needs to sort of align them within their own condition. I think, and I think one thing which is very, very important, I'm just want to add to what you said, right? I think you have to kind of cut yourself from the noise, right? I think noise only disturbs your focus and puts unnecessary pressure on everything that you've built, right?
Amazing statement, Ashu.
I think
Yes.
that's something which is very important, right? Shekhar, it was a pleasure to have you with us. Thank you so much for taking the time out. I genuinely, like I said, right, I look forward to having you with us very soon, and having a more elaborate session, right, discussing some very specific aspects, right, that are going to be important for founders, especially in a post-COVID world, which is just becoming so much more transparent, competitive, and the consumer expectation, for example, has become very clear, right? And I think that affinity is going to require a lot of work, right? The Indian consumer is going to require a lot more love, affection, work, right? For them to be in that relationship. Shekhar, it was a pleasure to have you with us. Thank you so much
Thank
for
you
taking
so
the
much,
time out.
Ashu. So grateful to you. It's my privilege and happiness being here, and indeed looking forward, to many more conversations with you. Thank you once again.
Thank you.